Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the 85th Annual STA Market Structure Conference in D.C. Joining me on set is Maragos, is the CEO of Dash Financial. We're going to get into the listed options business. Thank you very much, as always, for joining me. You just came from the listed options panel. What were some of the key focuses that you spoke about?
First off, it's always good to see you, Jill, and thanks for having me.
You just travel around the country and just do interviews.
It's fantastic. The panel was great. Obviously, we're in Washington, so a lot of regulatory themes. We talked about CAT and how that's the importance of it and how it's going. And, I would say also the nuance between how to solve for it on the option side is a little bit different than the equity side. Due to the different market structure. They talked about speed bumps a little bit, which is topical, and the possible effects that, on that if they were implemented in the option space. We also talked about big data, which actually, from a technology standpoint, is the most exciting thing for me because big data creates a lot of opportunities to make smart routers smarter, make more clever decisions, et cetera, and really improve the end experience for the customer.
That seems to be a real key focus here this year is data and what are we doing with all of it. But it's interesting, options volume has actually increased quite significantly. What do you think is behind that?
I think it's a number of things. I think that obviously we had a volatility event in February, but really, once New Year's happened, the market, volatility didn't go up. Okay, the stock market was going up and interest rates were going up, and options volumes picked up, even though volatility was tamed. And that's really been from the beginning of the year, to date. And what I think there's a few things. I think that people are now hedging risk again, where I think for the last few years the market was just drifting up. I think people do see a real risk out there, and they're now buying downside protection and trying to hedge different scenarios. We're definitely, I don't know where we are in the cycle, but we're definitely late in the cycle. So I think that there's a lot more action just based on people either looking to put on risk to create opportunity or to hedge, their existing inventories. Also, I think that there's also new players in the space. I think with crypto and a lot of other things, I think the younger generation has kind of been introduced to trading, and I think that's definitely flowing over into the options business, where there's more interest from the younger generation that are now entering the options market, which is obviously very exciting.
They seem to understand it more, and they seem to have more of a risk-on approach to trading. What would you like to see in terms of changes, though, with market structure, which is always looking to improve it?
Sure. We have a very complicated market structure. We have a lot of exchanges. We have a lot of strikes. So, a couple things, strike productization. Let's say, we have 1 million options that trade. Only, let's say, 10 to 20% of them actually have open interest.
Right.
So obviously, I think there's a lot more clever things that can be done to only list products that really people would have interested in trading. To release the quote burden and a lot of other things there. But also, I think that we talk about a lot of things. I think that we treat the symptoms rather than the disease. And Reg NMS is over 10 years old now, and protected quotes were created so to really break up all the liquidity being concentrated on 2 or 3 exchanges. And I think that 12 years later now, I think it's time to take a holistic look at the marketplace, because I think we shouldn't be adding exchanges for exchange's sake. We should be improving market quality for the end customer.
Let's talk about Dash now. So the institutional equity space, you've been building up on that, a big push there. You brought on ex-Bloomberg Tradebook CEO. What's the push behind building up the equities business?
Sure. Well, we're a technology company, first off. Okay, we're not. We don't view ourselves as an options company or an equities company. We're a technology company, and I think that and also, whenever there's great talent out there, we're always looking for good talent. Dash is always hiring good people. But I think, specifically on the equity focus, what I think is people are looking for more technology solutions than ever. They're not, best execution is an art, not a science. And I think that, especially the institutional investors are looking for better tools, to help them trade better, to get alpha out of the execution process, help them measure it, and help them configure things. So they have, obviously there's a lot of money flowing back and forth, and helping people have the best tools from a trading standpoint is relevant in equities and other asset classes. Obviously, in equities right now, it's very prevalent, and the definition of best execution is evolving. And so, obviously, we're meeting those challenges with technology and also great people.
All right, thank you. It was great to see you, Pete.
It was great to see you.
All right, thanks for joining me throughout the day. I'm Jill Malandrino, Global Market